No, but like I was saying, I hate Florida basketball. All right, everybody. Good to see you guys. Good morning. Special guest appearance in Knoxville, Tennessee. Mr. Matt Simon.
Hello.
In the house.
In the house. The perspective on this makes me look like Matt is my little child.
Goliath.
Yeah. And so I am thankful for that. He is not that small and I'm not that big. Hope you guys are doing good on this Green Tuesday. I mean, people were calling yesterday Orange Monday instead of Black Monday because of Trump. So maybe this will be Green Tuesday. I don't know.
Yeah.
I tell you what, though, if you were short going into the night, this song is for you. Shout out to everybody.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's back testing like a daddy man. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Dan.
Yes, good morning.
This market yesterday, correct me if I'm wrong, I think it was the widest point swing in history.
Oh, yeah.
We had a cool 400-point swing in the market yesterday.
That was incredible. I mean, when you said the widest, I'm thinking, can I give a quick bad analogy? When we were first time driving through the South, saw like a place selling trailers, but they had double wide.
Oh, yeah.
It's like a double. I thought of a double wide trailer.
Yeah.
And those are great.
Well,
we went in them. Some of them are beautiful.
Oh, no, listen, those double wides, there's no shame in a double wide. There's a socioeconomic class to this stuff where it's like, what's weird, it's not exactly how you think. Basically, a single wide trailer is, theoretically lower class. A double wide is middle class.
Ooh.
A triple wide, which I don't even think exists, is high class.
Okay.
And then what's weird is you would think it'd get bigger and bigger, but no. An Airstream or a little RV trailer is the highest class you can get.
Oh, it is. Airstream. Okay.
And so, okay, Dan, they do say you have echo. We can't hear it, but alas,
there is an echo.
There is an echo from Dan. So, Dan, you restart real quick.
I'll restart you guys.
We'll
Thanks.
see. Yeah.
Thanks. All right.
No, good to see you. We'll see you in a minute. Dan is in a cave. I appreciate someone saying that. And he's back. All right. Everybody let me know. How's the echo?
All right. Steven, give me a thumbs up or thumbs down. Still, I bet it's still an echo. Anybody hear anything?
Oh, it'll take them just a second to catch up.
It's fine.
In the meantime, futures are up. A cool 120 points, which sounds like a big day for futures until you realized, wait, it's Tuesday morning. So I believe Sunday night they opened up. Somebody chat can correct me if I'm wrong, but I think they opened up over 5% down. So what's the old rule of halves, right? 5% down, Was that last night's futures?
Mm-hmm.
Yeah.
So
Yeah.
5% down.
Still
last
up.
night's future. 2.5% up. Today's futures.
Yeah.
What does this mean?
Yeah.
Rule of halves. I'm not sure.
Well, Dan, I mean, obviously you can't talk because of the echo. So today we'll just ask you to do signs. Yeah, exactly. So Dan,
Is this bearish?
Dan, do you fade the market here, thumbs up or thumbs down on the open if you have to take a direction? You don't want to take a direction, I know, but if you have to take a direction, do we fade the market?
Boy, that's especially with the impending, what would you call tonight at midnight? Isn't this another liberation or another?
Yeah. There's so many. We get liberated. That's the beautiful thing about being an American. We get liberated so many times.
So many. Two things. I think if I'm long a few deltas, even though we've been down so much, I would be tempted to cut the position, even though this is nothing, to come back 100 points. Oh, can you hear me?
I think that's right.
Yeah, I think it'd be tough to get too serious about or too excited about the longs, right? Because I think of yesterday morning support. What was the right around? Was it 48.50? I believe, right? We went just a little bit below there, 48.33. Remember that? And I remember there was that seemed like right from there, it just like everything blasted up, and so we're up from that point. What are we up? About 300 points, 400 points from 48.50 and SPX.
Oh, 48.50, 9.50.
Yeah, probably
50.
400.
Yeah.
400 points. Yeah. Echo's gone now. Shout out Jonah for giving us the good news. Echo's gone.
Thank you, Joe. But anyways, I think the with the VIX coming down, it's just like you don't buy it yet, right? With it's way too early. I think you'd have to take some profits. I know you have a lot of people that are I've talked to a couple people yesterday. They said, I have my shopping list, right? I have my shopping list of these are the stocks or ETFs or that I'm either going to buy or get long via a poor man's covered right, a vertical debit spread, a directional butterfly or calendar. And I just that mentality doesn't sound right to me as a contrarian. When people say, I have my shopping list, everything's on a bargain, I'm going to go buy it. I don't know. It doesn't, doesn't sit with me real well for a particular, that's the low, right? When you hear people say, this is at a fire sale, this is at a fire sale, this is, but again, I think one thing I've been thinking about the last 48, 72 hours was, you think about sizing is a wonderful tool, a risk management, and scaling is basically saying, hey, I'll dab my toes, right? If someone wants to dab their toes in the long side or something, that's fine. But to put both feet in there, way too early, I think. I mean, it's
well, I'll say that, and this has turned into macro show. And Dan, do you mind muting on your left underneath there when you're not talking? Let's see how that works.
Oh, I'm sorry.
No, you're fine. You're
All right.
fine. All right. Let me know how that works. Matt is our sound guy, and I made him be here today.
What we're doing is the next option Omega product. We're actually pivoting into the audio space. We're going to release a Dan Echo. And it's going to be because audio engineers pay big money for the quality reverb that we can deliver.
Oh, no,
we're going to be monetizing this just so everybody knows.
Yeah, your loss is our testing.
That's right.
So thank you. I think that vol, there's two things in my mind that are, and again, this is turning into macro talk, but hey, this is the beauty of doing an everyday show. We're just going to talk about macro stuff today. Sorry, guys. Hope you like our dribbling. The thing is, I was telling Matt yesterday, what's crazy to me is I still don't think the market believes Trump. He literally said, China has till noon today,
right,
or they're going to over 100% tariffs. and we're up 123 points. Now, in the futures, do you believe him or do you not believe him? Clearly, the market doesn't believe that he's going to 103% Taylor. I don't know if they should believe him. I don't know that. But in my mind, so far the narrative has been those who don't believe Trump this year are getting wrecked. And so I go into this personally speaking to say, I don't know if we're going to go down. The market might have already front run so much that they need to go up even on that announcement. But I believe what he's saying in this time around. And so I'm planning accordingly.
Yeah. And there's, we've speculated because we're not macro guys predominantly, but we speculated the argument for tariffs, for several weeks. And the argument for doing them includes this idea that maybe in the U.S., because of the debt that has to get refinanced, that the interest rates need to come down. And when SPX is at 6,100, is anybody gonna lower interest rates? If asset prices drop, there's usually long-term compression of interest rates, which will happen naturally from assets being devalued. That was 20% ago in the market, aka like 2 or 3 weeks ago, a month ago. So to the point of taking Trump seriously about something that he said for, I think he's been talking about tariffs
30 years.
30 years.
Yeah.
And seems to be happening. So yeah, the tweet yesterday was an additional 50% increase on China.
Yeah, it'd be 104% tariff.
Yeah.
I don't even know how that, like, do you have to, so I don't even know. I'm not that good at math. I don't understand how 104% tariff works. And Dan, you don't have to stay muted. Sorry, I was trying to test it out. So if you have any thoughts.
Yeah. No, I was just thinking, it's one thing for Trump to, make fun of an opponent and say something crazy, right? But now when you're in the middle of something a little more serious, with the tariffs, you can just watch the VIX yesterday. I mean, I've never seen the VIX. The VIX is basically putting up the white flag, and there's total. For a while, do you remember? Was it last week? Said there's no fear in the market. VIX, early last week or whatever. For VIX was 26 or barely 27. Now VIX will go from 40 to 48 quickly, 40 to 47. There's no filter on it at this point. And that's, I think, reiterating what you guys said, that there's total, there's not a lot of trust in what he's saying, even though I agree with you, Troy. I believe it. It's just the presentation isn't good. So big candles are going to continue, but except the difference when big candles this week and big candles 2-3 weeks ago, they're really getting big. Yesterday was just like, I don't know if there ever was a bigger candle day.
I don't think there was. Points wise, I think it is the biggest. I saw something that it is one of the biggest in history. Just from a point. I'm not saying percentage wise. I don't know if that's the case, but from a points, the market's so much bigger than it was.
I don't know if it means anything, but I was just looking at a 0-wide Iron Condor, 0-day Iron Condor. And it was like, I think I looked at it just because it was historic, how many points between the two shorts. And I put one on during a class, a 0-day, because it was so wide and wonderful. And you know what? When I saw the market flying up, I'm like, I'm buying this sucker back, for a 30 cent, whatever, law quickly. I was like, this just doesn't look right? It doesn't. This thing's like moving 30, 40 points a second. And it's like, I'm not comfortable in this type of trade.
No, I think that's right. And I think those markets, to the point yesterday, I was telling Matt and Rusty yesterday, Dan, do you know how much at 4 p.m. or 3:59 p.m. yesterday, today's straddle cost?
No.
16,000.
How much?
That would be upside down, right? That was underpriced. Is that right?
Oh, I don't think 120.
120 points. No, yeah.
The expected move is 180 for that.
Right.
Yeah.
There yet.
So
that's a good point, Troy. The expected moves have been crazy. But when you look at the expected move for yesterday, if I believe coming into the day, it wasn't far. It kind of hit it, which was that low 48. I think the expected move to the downside was 48.74, if I just remember. But 48.50, that was like a rocket ship. Wouldn't you agree? I mean, when it bounced yesterday off of that point, and so I just think I see more students and more people more wigged out, right? It's just they're exhausted. They're and it's a patience game, It's because you just think like, okay, I'm getting a little long now. It's okay. And then it's not. It's like people are stopped doing it. So it's like, hopefully today holds more than 100 points up. I mean, that just seems very lame.
It's like there's this old saying, the beatings will continue until morale improves, kind of in the culture. It's like,
I like that.
200-point days will continue until morale improves. Be it 200 points one way or the other, they will continue until.
Well, and you got to be, I'll tell you, if there's ever a lesson for traders to learn, if you don't have an order in, right? I mean, it's like a bumper or a Rick going back and forth. Like when it rallied yesterday and it was up, 200 points or 250 for a couple seconds. If you have an order in, you had a great fill yesterday. And I think the principle is whatever order you have in, you better have something in to get out of it, because it's almost like we were talking yesterday. If you have like whether it be a double calendar, a double butterfly, or Iron Condor with two credit spreads, at some point they'll both make money.
Yeah, no, I think that's right. And I mean, I think one of the things, there's two thoughts I have with this type of stuff. One, the chat, shout out to the chat. I mean, they're on fire today. Yes, the sound quality is not great. That's apologies on my fault.
This is a one-time thing today. I'm not
special occasion.
Yeah.
But two, Dan, apparently there's a secret power where the more you lean into your mic, the less echo there is.
Oh, the more I lean.
Yeah. So even if you want to hold that mic, just kiss that mic on the lips.
I like it. Was it Elvis or who used to really be close to the mic?
Any 90s rocker?
Yeah.
Oh, yeah, 90s rocker.
Yeah.
Ladies and gentlemen.
That's right. That's perfect.
Yeah. So, yeah, that's great. And then two, I think on a move like today, again, I think a lot of people are coming today with such long deltas from if they have multiple positions on selling puts, that this is a great relief, Now, the question is, if you have directional, so like for me personally, options involve risk. I'm not giving financial advice. Part of my upside stuff is I have a lot of broken wing butterflies to the upside. They're going to open up good this morning.
Yeah.
The question I have to wrestle with is, how much do I trust this market to extend into into tomorrow's session? That's really the question you have to wrestle with. And so personally speaking, I'm going to take profit on some. I'll probably let some ride, but I don't think this is a market where you ride or die. If you got enough positions on, take some profit as you go. Don't be, don't be stingy and don't be greedy. What's the old saying? Piggies get slaughtered.
Yeah.
So, and I love being a little piggy, but I don't want to be slaughtered today. We'll take one question and then we'll let everybody kind of continue to please like and subscribe, and then put in the video your favorite part of the sound today. I would love to hear it, you guys. And then Tom asked to Dan, diagonal trader here. Shout out diagonal traders. The biggest risk I have with calendars and diagonals in this market is the IV crush when there's a large debit paid to open the trade. Anything you can do for these DC guys, these diagonal guys?
Yeah, Tom, that's a great observation. And that's diagonals are long Vega and calendars. And it's been historic how calendars have actually worked because the vols have stayed up for the most part. But, right now I would be looking at more, especially we're going to have a bit of a crush here at the opening. Just switching some of the doubles from maybe a double calendar to a double butterfly, or we've been doing these things called combos, which would be, if you want more people love combos because you can get way out of the money, right? Like a low 2015 delta. But if you can do a butterfly on the upside, a calendar on the downside, and I know I want to test more of those with Matt and different things, but the long, it depends on your long diagonal. But yes, I'm definitely more concerned with the long Vega element. I mean, we've been trying to be net short Vega, even with the VIX going up. But I think these diagonals, I mean, the only positive thing on the upside, if you have a diagonal, is that your deltas, you're pretty long deltas, which is good. The calendars are going to have more risk as the volatility goes down. But here's the other thing to look at. One quick thing on volatility. Sometimes, when you're looking at a mixed month spread, always monitor the volatility of each of your 4 options, right? Monitor the volatility, because I've seen days where the VIX is down, but something like a double calendar or a calendar could do okay, right? Because VIX doesn't represent your 2 long strikes. I mean, generally, if the VIX comes down, it's not a great day for long Vega. But, it depends on how where is your longs located, where your shorts located. And so, but I definitely would not want to be, I'm not going to say I don't think the vol's going higher. I'm not saying that, but I definitely wouldn't be a lot of net long Vega on some of these trades. But it, again, it depends on the trade. But Tom says we are talking about fixed strike vols. What does that mean?
Yeah, I don't know what that means. You can elaborate, Tom.
Tom, what does that mean? Fixed strike.
I guess in the sense that you already own the diagonal, or you own the time spread, and so fixed strike in that sense that you have bought that Vega already.
Oh, you're already long it, you mean?
Yeah. Which I don't know, but I mean, to the point, if you own, I'll put an example. I have a bunch of put calendars from yesterday. They're dead. They're all dead. Oh, the IV of option strikes. The IV of the individual strike versus the overall Vega, which is going to respond accordingly, Tom. I mean, to the overall vol of the market. In particular, this vol gets a little tricky. Yeah, that's right. So if it was over 100% yesterday, and I don't know what VIX is or front month vol's down pretty big today.
VIX is about 40 right now.
Yeah, front month vol's down pretty big. You did like that. I have put calendars, like there's not much. You have to hedge to the upside basically, because you that vol, you're just eating it today.
Yeah.
There's nothing. Now, if you want to, today's actually, again, just not financial advice. With vol down this much and nothing resolved yet on the tariff front, this actually might be, everyone's going into this being like Warren Buffett. Like, I've got to your point, like I got this bag of stocks I want to buy. Someone like me goes into today and say, well, I got a bag of vol I want to buy because it's on sale right now in a market where it's underpriced. Now, I could be completely wrong. We could go up 8,000 points in the next 2 days, resolve all of this. And vol's going to get absolutely crushed. So it is that balancing act with diagonal trades and things like that. When you have a diagonal or you have some sort of time spread, yes, you benefit from vol expansion, but with a fixed strike, you're also battling deltas a little bit. And so if you had a put calendar, if you had a 5,500 put calendar last Friday, that you thought, well, that's my hedge for the weekend, you got in trouble.
Yeah.
And so that reduction today is not going to help you either. So those are the two things with time spread, deltas and vol.
Well, and there's a big, and like you said, there's a big difference. Again, we're talking durations too. Is it a 0-day calendar? Is it a 15-day calendar? Is it a 30-day calendar? But the only saving grace with a diagonal, a poor man's covered, right? You're long a lot more delta, right? So the delta is generally overshadowing. Your delta is overshadowing your volatility risk. But yeah, I mean, it's one thing historically, if you ever look at a chart of the VIX or something like that, we can stay at the low level volatilities historically, like 12, 13, 14 for a long time, but very seldom do you stay that long up at, a high volatility number. Now, I think this is different, right? This is into the COVID comparisons in terms of the effect of volatility. So it's still early. Is 40 volatility high? It is. Will we stay up at 40, a long time? No, we won't. But right now, right, for the next 5 or 6 hours, it's too early to say is 40 going, we could be at 45 tomorrow. Right. I mean,
that's right.
I hate to say it, but
no, that's right. And what you have to do in my mind with that stuff is to say, you almost have to have a thesis going into that type of trade with this high vol. And you basically say, I think this floor on vol market wise right now is 35. Mm-hmm. And I think the ceiling is 80, 90, whatever. I think we're staying high vol. If this is your thesis. And what you do is you say, okay, so for me, according to my thesis, a 35, a 40 VIX is relatively cheap compared to what I think it can do. So take your shot. Take your shot. Right. I would not put a diagonal or a time spread on. I say this, and I literally did yesterday. So do as I say, not as I do. But I would not put it on with a high VIX environment according to your thesis, because the vol's already fairly priced as you see it. And that's right. You want to get those type of things for a discount. And so I think if you're going into this saying nothing's resolved yet, I think we're going lower, I think vol's going higher, then today at the open is a good time to maybe dabble with some spreads, time spreads. If you think that this whole thing's overblown and VIX goes to 20, I would not do any time spread. Like I would sell, put spreads at that point. And so it's all playing how you want to play vol.
Well, and Troy, I think, like you said, going back to the thesis, it's like I look at it because, you might have people have 4 or 5 different trades in SPX, or they've got trades in volatility. It's where do you want to be? When we start getting 35, 40 volatility, even maybe a little bit before that, you can put on different trades, but I want to be net short Vega overall. I mean, at 40 VIX, does it mean you can't do long Vega? No, but I don't want to be net long Vega at 40 VIX. It doesn't mean like, but like you said, Troy, you might have a thesis. Hey, we're going to go down further. VIX could get up to 60 or 70. That's fine. But, again, what we found is both sides can win, right? I just don't think, for various trades, we do a lot, in SPX, I don't want to be net long Vega right now, right? And overall, I don't think that's but again, when you're talking diagonals, that's different than talking double calendars or butterflies, because those are, we're talking double calendars and these type of trades, more delta neutral or relatively delta neutral. Diagonals are different. They're in the long portfolio. So even if volatility goes down, you're making money because you're pretty long deltas in some of these trades. So it's just, back to the
that's exactly right.
Back to the thesis.
And this is a dumb way to look at it, but this is one of my favorite books. So this is a dumb way to look at, but this is from someone who, I like books like that. So anyway, one of the ways you can look at this, and it clears it up because options can be complicated. Look at the front month VX contract in the futures and look at the next month VX contract in the futures. If the front month is higher than the back month, we are, in a classical sense, in backwardation, right? Backwardation means high vol. It means, something's happening. We usually blip in and out of that. If we're in it for like a day and then we come out.
Yeah.
When that spread gets, again, according to your thesis, really wide, where the front month is that much more expensive than the next month, the title was backwards. I don't know how to read. Anyway, that's the whole point. Is I'm stupid. How I Became Stupid is the name of the book for anybody who wants to read that. If you look at that, you say, okay, would I buy that front month spread today? It's 15 points higher than the next month. We're that much in backwardation. Would I buy that vol today? If the answer is yes, put a time spread on. Go high Vega, whatever you want to do. If the answer is no, I would perhaps not put a lot of positive Vega into your trade until that goes down. Does that make sense at all?
Yeah.
I don't know. I'm asking, but I was just saying that, asking myself, really, does that make sense?
Well, and that's also another topic for different, people look at skews with calendars. When you have a positive skew, right? That's good, right? And the problem is a positive skew could be because the vols are really high.
That's right.
That's and so someone will say, well, the vols are, VIX is 50, but I can get a positive skew in a calendar. That may not be good, right? Because that's saying something. So anyway, I don't want to go down the weeds on that.
No, I'd love this to turn into a vol futures show too. This is one of my favorite trades during the thing, but that's not today.
Yeah.
So friends, listen, we're up 162 points, a cool 3%. Blessings to you today. May the trading go well, or the non-trading just be, enjoy the garden for one more day. It's fine. And we will be back tomorrow with microphones and headphones. You can't imagine. It will
Guitars.
be. Many people have said tomorrow's audio is going to be unlike any audio they've ever seen.
So it's today's.
Yeah, well, that's true.
Yeah.
So anyway, you guys have a great day. We will see you tomorrow. Have a good rest of them. Bye.
Yeah.